really believe you're doing good. And on today's video, we're going to look at market expectations for today. And right to the charts, let me use gold. So this is the only way to tell your daily bias, guys. Okay. So first of all, let me remove all the drawings that I have in my chart. This is basically I'm going to do the top-down analysis. All right. So I'll begin from the monthly chart. Okay. So the monthly chart, this is what is showing me. When you look at the charts, you'll find that the previous month, that is the month of April, the previous month was swept. Okay. It was swept just right there, and that is May. And when you can see so clearly, there is a fair value gap just right below. Okay, this is a fair value gap just right there. A fair value gap, a monthly fair value gap. So with this alone, this gives you the insights of what to expect. Once the previous month high was swept, and there is a fair value gap just below, this gives you a reason to believe that the price might be headed back to the fair value gap that was printed last month, right? Between March and May, right? Now, so once you have this data, monthly data on your charts, now that you have a bearish expectation, what do? You go back to your weekly chart, right? You go back to your weekly chart. If you have to go bearish, where will you go bearish from? That's the question. Okay. So now that you've marked your monthly fair value gap, okay, you've marked your monthly fair value gap, and that is the previous monthly high that was swept. So meaning we are going bearish on gold. Okay. So I would like to just note this down. This monthly FVG. Okay. And the price is coming from the previous month's high. So this is month's or sell side liquidity. Sorry, it's a buy side liquidity. Okay. With this, you already have the bias, but where do you call low from? Because we expect the price to come to this fair value gap. Okay. So we go back, or we go down to the daily time frame. It's very simple. Top-down analysis is very simple. This is how I find my daily bias. Okay. This is how I find my daily bias according to ICT. Now, when you look at the daily, and remember that we are trying to find where we are going down from now that we have a bearish bias. Okay. So the next thing you have to mark on the charts is an institutional reference point where the price might go to before reversing. Okay. When you look at the daily chart, you find that this fair value gap right here was traded into. Okay, just right there. So for me, I don't have a reason to believe the price will go back there because the fair value gap has been already traded into. The next fair value gap we see is this daily fair value gap just right here, right there. And this is where I might go low from. Okay, this is where I might expect the price to go before going lower. Before going lower to the month fair value gap or this sell side liquidity. Okay. Now, so the question is, where do you call low from? So me, for my daily chart, I think I already have my point of interest. It's the daily fair value gap, right? This daily fair value gap right there. So now, once you found that, you go down to another time frame low. Okay. So I prefer the 4-hour time frame. The 4-hour time frame. So at the 4-hour time frame, you find out that the price is bullish. Okay, the price is bullish. So if the price is bullish, but we already have the bigger time frame, buyers. So we are expecting the price to go to trade into this daily fair value gap before dropping lower to the monthly fair value gap and this sell side liquidity key zone right here. Okay, sell side zone, sell side liquidity. And like I said before, you know how the price moves from liquidity to liquidity. If the price came from the external liquidity, it goes back to external liquidity or the internal liquidity. So from internal to external and vice versa, right? So this is what I'm expecting. I'm expecting this sell side liquidity to be hunted later. Okay. So now that you have the 4-hour time frame, you've dropped from the monthly to the weekly to the daily and to the now you are in the 4-hour. We go to 1-hour time frame. All right, just to find where we might go low from. Now we go to 1-hour time frame. 1-hour time frame. Still keeping the daily fair value gap untouched. Just let it stay there. Okay. And as you can see again, there's a trend line liquidity just here. And trend line liquidity is, I believe the trend line liquidity attracts the price. Okay. In most times, based on my experience on this, I've seen many times trend line liquidity getting hunted. Okay. Now with this data, let's go to the 15 minutes time frame. 15 minutes time frame. 15 minutes time frame. Here is the 15 minutes time frame, guys. So as you can see, the price is already in the daily fair value gap. And first of all, I would want us to mark the previous day high and the previous day low. That will add our insights to the expectations that we are having. So to mark the previous day high and the previous day low, and go back to daily. The daily chart. Okay, the daily chart. The daily chart, you can see that this is the yesterday's candle, Tuesday's candle. You mark its previous high, just like that, and you mark the previous low, just like that. Okay, and let's go back to our 15 minutes, because okay. So going back to our 15 minutes chart, there's one thing I want us to mark. Okay, it's very important. Now that you have your previous day high right here, and you have your previous day low right here. With all this trend line liquidity, okay, let me remove this because you talked about it. So now, what am I expecting right here? Where is the next buy side liquidity where the price might go low from? Again, there's one very important thing that I want to tell you. It's about the Asian session. The Asian session is very important for an intraday trader. Okay, so how do you mark the Asian session? Pick your rectangle, then you begin from 2 a.m. in the after the midnight to 7 p.m. in the morning, Nyan time. Okay, just like that, and you drag to the lows of it and to the highs of it right there. As you all know, the Asian sessions carries a lot of liquidity. Okay, so now that we have this on our charts, you can mark this the previous day high as the buy side liquidity. The buy side liquidity, all right, that's our buy side liquidity. Okay, so what I'm expecting is the price to buy, the price to trade into or to tap into the previous day high, to grab those the liquidity resting at the buy side liquidity, that is the previous day high, and maybe trade a little bit higher, if not to the equilibrium of the daily FVG before going down. Okay, before going down, that is my expectations on gold. So I'm expecting price to go bullish for a while, but the long term, or if it goes bullish today to this fair value cap or to this buy side liquidity, we might begin to look for sales to this sell side liquidity, to this monthly fair value cap, and the trend line liquidity that I just showed you, it's just right here. So that liquidity might really attract the price. So my bias for today on gold is buy to sell. I'm expecting it to grab the liquidity, the buy side liquidity, and the daily fair value cap, and then sell. Okay. However, that might not happen today completely, but we are expecting something like that. So that is it for gold, and I hope you apply the same knowledge on other assets that you trade. Might be currency measures, indices and other stuff. So it will be really helpful, guys. And up to there, let me believe that you've gotten some knowledge on the same. And thank you for watching, and expect more of ICT content. Okay, it's very important. And subscribe, and see you on my next video. Peace.